Okay, so today we're diving into something I know a lot of people are thinking about, and that's how to get started with investing, especially when the market feels kind of unpredictable.
Yeah, market timing can be really tough, even for experienced investors.
Right. It's like, when is the right time to jump in? So you sent over this really interesting set of YouTube videos from a channel called Risks X Rewards.
And this channel really caught my eye too. It seems like the speaker is really in the trenches, sharing their actual experiences and what they're seeing in the market.
Yeah, and they seem to have a really practical, down-to-earth approach, which I think is perfect for anyone who's just starting to dip their toes in the investing waters.
So what we're going to do today is go through those videos, pull out the most important takeaways, and really try to break down what it all means for you as you're thinking about your first investments.
Like, we want to make sure you walk away feeling like, okay, I get it, I can do this, and not like your head is spinning.
Exactly. And this is where one of the speaker's first points is really encouraging. They talk about how even if some of the investing concepts feel a little over your head at first, the simple act of hearing them and being exposed to them can actually plant seeds in your mind.
Kind of like building a foundation, even if you don't realize it.
Yeah. And they even mention this idea of having deja vu moments later on where you come across an investing idea or see something happening in the market and it feels familiar, even if you can't quite remember where you heard it before.
It's like those subconscious lessons are suddenly coming to the surface.
And I think that's a really powerful takeaway for beginners, especially if you're feeling a little intimidated by all the jargon and strategies and everything.
Yeah, it's like just keep learning, keep absorbing, and those aha moments will come.
Now let's talk about the speaker's perspective on where the market is right now. They see the current volatility, especially after what they describe as a really strong bull market, as potentially a good time for new investors to get started.
Oh, that's interesting. So, like, maybe this is the dip everyone's always talking about.
Yeah, the speaker seems to think so. And one of the big reasons they're bullish on the future is the growth of AI.
Artificial intelligence, right? That's everywhere these days.
And the speaker believes that AI is still in its early stages, meaning there's a lot of potential for growth and innovation, which could translate into a lot of investment opportunities.
So, like, AI could be the next big wave, the next internet boom kind of thing.
Potentially, yeah. And along with AI, the speaker also talks about how global events, like what's happening with different countries' economies, can impact the market.
Like China's recovery, for example, or geopolitical tensions, right?
Exactly. Those things can create uncertainty, which can make the market a bit jumpy, but they can also create buying opportunities.
So the speaker isn't saying run out and buy everything today, but more like get yourself ready because things could get interesting.
Yeah, they suggest that waiting too long could mean missing out on some favorable entry points.
And speaking of getting ready, if someone is totally brand new to investing, where do they even start? Like, what about opening an account?
Well, the speaker actually mentions Robinhood as a platform they find pretty user-friendly, especially for beginners.
Oh, yeah, Robinhood. I've heard of that. It's like the app for investing or something.
Yeah, it's designed to be really simple and easy to use. And they also have a referral program, which can be beneficial if you know someone who already uses it.
Okay, so that's something to look into. But before we even get to platforms and accounts and stuff, the speaker makes a really important point about the best investment you can make.
And that's investing in yourself, right?
Absolutely, like your knowledge, your skills, that kind of thing.
Exactly. But they also make it clear that you don't need a ton of money to start investing in the stock market.
So you don't need to be like a millionaire to get started.
No, not at all.
Uh,
The speaker emphasizes that even small, consistent investments like $20 a week or $100 a month can grow over time, especially if you invest regularly when the market is down.
so like consistency is key, even if the amount seems small.
Now, this is where it gets kind of eye-opening. The speaker shares some of their own investment results, and they've had some pretty impressive returns, like 300% to 1,200%.
Whoa, those are some serious gains.
Yeah, but it's important to understand that these were achieved through options trading, which is a more advanced and riskier strategy than just buying and holding stocks.
Right, options are like a whole other level, right?
Definitely not something for beginners to jump into right away, but it does illustrate the potential that exists in the market.
So options aside, the speaker does give some specific stock examples that they think have potential.
Yeah, they mentioned some familiar names like Walmart, Amazon, and Meta.
Oh, okay, so companies people probably already know and use.
Exactly. And the speaker's reasoning for those picks can be a good starting point for your own research, to see if you agree with their assessment.
And they were particularly interested in Meta if the price was still below $600 per share. I think they said
Yeah, that's right. So they're not just throwing out random names. They're giving you some specific criteria to consider.
Now, since we're talking about getting started, I'm curious, what does the speaker say about investing with smaller amounts? Like, is it even worth it if you can only put in a little bit at a time?
They actually address that head on, and they're really adamant that even small, consistent investments can make a big difference over time.
Like they're more about the long game, not getting rich quick.
Exactly. And they emphasize that investing regularly, especially during market downturns, can potentially outperform just keeping your money in a savings account, which is what a lot of people do.
So it's like, don't let those smaller amounts discourage you. It's about starting somewhere and being consistent.
Absolutely. Now, one of the companies the speaker mentioned that I found particularly interesting was Walmart, especially as a potential investment during volatile times.
Oh, why is that? I wouldn't necessarily think of Walmart as like a super exciting investment.
Well, the speaker's logic is that Walmart is pretty recession-proof, meaning people still need to buy groceries and essentials regardless of the economy.
Oh, that makes sense. It's like a staple.
Yeah, so it might be a more stable option when the market feels shaky.
Okay, so we've talked a lot about specific strategies and examples, but it's important to remember, and the speaker emphasizes this too, that none of this is financial advice.
Right, we're just having a conversation, sharing some interesting insights from this YouTube channel.
So always do your own research and consult with a qualified financial advisor before making any investment decisions.
Definitely. Now let's talk about a core principle in investing that the speaker highlights, which is the concept of risk versus reward.
Oh, right. Like every investment has some potential for gain, but also some potential for loss.
Exactly. There's always a trade-off, and understanding that balance is crucial.
And they explain this really interesting concept called buy the rumor, sell the news.
Yeah, it's a classic market saying, and it basically means that a stock's price might go up on speculation or anticipation of good news, but then actually drop when the news is officially announced.
So like sometimes the hype is bigger than the actual event.
Right. And it's a good reminder that market psychology isn't always logical or predictable.
Okay, that's definitely something to keep in mind. Now, the speaker also shares a personal observation about how the market sometimes behaves during the trading day.
Oh yeah, what was that?
They've noticed a tendency for the market to open positively, but then sometimes dip a little around 10 to 10:30 in the morning.
So, maybe a better time to buy might be a little later in the morning.
Potentially, yeah. But of course, this is just a pattern they've observed, not a guaranteed rule.
Right, and that's where the VIX comes in, which the speaker mentions as a way to gauge market sentiment.
The VIX, the volatility index, right?
Yep. They suggest looking at whether the VIX is higher or lower compared to the previous day.
So a lower VIX might mean the market is feeling more stable, while a higher VIX could indicate more uncertainty.
Exactly. It's another tool to add to your arsenal.
Now, it's worth mentioning that the speaker's own investments go beyond just the stock market.
Oh yeah, they're pretty diversified.
Yeah, they talk about having investments in property, businesses, and even self-publishing, which shows you there are lots of different ways to build wealth.
And speaking of building wealth, the speaker really stresses the importance of continuous learning.
Like always be educating yourself.
Exactly. And seeking out knowledge from people who have more experience is really valuable, which is what you're doing right now by listening to this deep dive.
Ah, that's nice of you to say. Okay, so let's talk about the CPI report, which the speaker mentions as a really important economic indicator.
Consumer Price Index, right.
Yeah. This report looks at inflation, and the speaker explains that it can have a big impact on stock prices.
Because a report showing that inflation is cooling down can often lead to a positive market reaction.
Yeah, because investors might anticipate potential interest rate cuts, which can stimulate the economy.
Now, along with those regular economic reports, the speaker also acknowledges that unpredictable events, what they call black swan events, can really shake things up.
Oh, yeah, like those events that nobody sees coming.
Right, things like major international conflicts or big disruptions.
And they say those events can actually create investment opportunities for those who are prepared.
Now, something I found really interesting about the speaker is how they describe their approach to creating content.
Oh, what do they say?
They use this term from the tech world, minimal viable product, or MVP.
Okay, I've heard that term before, but I'm not sure I fully understand it.
Well, basically, it means creating something that's functional and useful, even if it's not perfect or completely polished.
So like getting it out there and getting feedback rather than waiting until it's perfect.
Exactly. And the speaker applies that same philosophy to their YouTube videos, which I think is pretty cool.
Yeah, it makes their content feel more relatable, like they're just having a conversation with you.
And that ties into their big emphasis on building a community of beginning investors, which I think is really admirable.
Like they want to create a space where people can learn together and support each other.
Yeah, and they're very conscious of trying to create content that appeals to different levels of experience so that everyone can benefit.
They don't want to leave anyone behind.
Now, when it comes to taking action, the speaker is all about being decisive.
Like not being afraid to jump in when you see an opportunity.
Right. They believe that market conditions can change quickly, so you have to be ready to move.
Okay, so how does that apply to something like the CPI report? Like how do you time your investments around that?
Well, the speaker suggests that the market might actually react negatively before the CPI report comes out and then change direction based on the actual news.
So like there could be an opportunity to buy during that initial dip.
Potentially, yeah. But again, it's all about being prepared and doing your own research.
Now, the speaker also gets pretty personal and shares a bit about their own investing journey.
Oh, yeah, they've been at this for a while now.
Yeah, they mentioned starting back in 2018, and they've been consistently buying the dip, which means buying more of a stock when the price drops.
And that's a classic long-term strategy, which takes patience and discipline.
Yeah, it's not about trying to get rich quick. It's about believing in the companies you invest in and riding out the ups and downs.
Now, a common question that comes up, especially for new investors, is whether investing is just gambling.
Oh, I've definitely heard that before.
And the speaker addresses this directly. They differentiate the two by emphasizing that investing in established companies over the long term significantly increases your chances of positive returns, unlike gambling, which is more about chance and short-term outcomes.
So it's about making informed decisions and having a long-term perspective.
Right. And one of the speaker's biggest pieces of advice is to think for yourself.
Like, don't just follow the crowd or blindly trust what you hear in the news.
Exactly. They encourage viewers to critically evaluate information, do their own research, and form their own opinions.
Because ultimately, it's your money and your decisions.
Now, this ties into their warning about the fear of missing out, or FOMO.
Oh yeah, FOMO can be a powerful force, especially in the investing world.
Definitely. And the speaker cautions against rushing into investments just because the market has gone up a lot and everyone is talking about it.
Because often that's a sign that the market is overvalued and due for a correction.
Right. So it's important to stay level-headed and not get swept up in the hype.
Now, underlying a lot of the speaker's commentary is this classic investment principle of buy low, sell high.
Yep. That's the golden rule, but it's easier said than done.
Definitely. But the speaker's whole approach seems to be about recognizing those opportunities to buy when a stock is potentially undervalued
Right.
and maybe selling when it seems overvalued.
Now, to get really specific, the speaker actually shares a whole list of stocks they've bought.
Oh, yeah. This is where it gets really interesting, right?
Yeah, they mentioned companies like Palantir, SoFi, Archer Aviation, Apple, DraftKings, Ford, Shopify, Robinhood, Viking, Callan, American Infrastructure, Energy Transfer, even a short ETF called FAZ.
Whoa, that's a lot of names.
Right. It's a really diverse mix, and for many of them, they give you the price they bought at, where it was trading at the time of recording, and their reasons for buying, both the successes and the failures.
So they're totally transparent about their wins and losses.
Yeah, which is really refreshing. And they specifically highlight some of their contrarian bets, which are investments they made when everyone else was panicking.
Oh, that's gutsy. So like going against the grain.
Exactly. And they point to their early investments in Palantir and SoFi as examples of how contrarian thinking can pay off.
So it's like, don't be afraid to have a different perspective. Do your own research and potentially see opportunities where others see fear.
Now, another technique the speaker describes is buying a larger number of shares than they intend to keep, with the goal of selling a portion for a quick profit.
So kind of like playing the short-term fluctuations.
Yeah, and that can help to lower the average cost of the remaining shares.
Okay, that's an interesting tactic. Now, they also talk about their experience with options trading, right?
Yeah, they mentioned some successful trades with SoFi, which again highlights the potential for big gains, but also the higher risk.
Right, options are not for the faint of heart.
Definitely not. And the speaker also shares their experience with day trading, both the good and the bad.
Oh, day trading. That's like the super fast-paced version of investing, right?
Yeah, it's all about trying to profit from small price movements throughout the day.
And the speaker actually cautions beginners against day trading because it requires a lot of discipline and knowledge.
They emphasize that it's very easy to get caught up in the excitement and make impulsive decisions, which can lead to big losses.
So it's like proceed with extreme caution if you're thinking about day trading.
Absolutely. Now, a really practical piece of advice the speaker gives for starting your investment research is to think about companies whose products you already use and understand.
Oh, that's a great idea. Like, start with what you know.
Yeah, for example, if you're a big fan of a particular clothing brand, that could be a good starting point to learn more about the company behind it.
It makes the research process less intimidating because you already have some familiarity with the product.
And along with understanding the product, the speaker also talks about the importance of understanding a company's financials.
Like looking at earnings reports and future guidance, right?
Exactly. Those things can give you insights into a company's health and its potential for growth.
And they mention examples like Snap, Micron, and Nike.
Now, speaking of Micron, the speaker explains that some industries, like the semiconductor industry, are cyclical.
Cyclical, meaning their performance goes up and down based on broader economic trends.
Exactly.
Yeah.
So if you're investing in a cyclical industry, you have to be prepared for those fluctuations.
Okay, so it's not just about picking the right company, it's also about understanding the bigger picture.
Now, some of the speaker's investments are quite openly referred to as lottery tickets.
Lottery tickets, like they're just taking a gamble.
Well, not exactly, but they're acknowledging that these are high-risk, high-reward investments.
So like the potential for big gains is there, but so is the potential for big losses.
Right, and examples include some of the electric vehicle companies and some of the smaller, more speculative stocks.
Okay, so it's important to be realistic about the risks involved with those types of investments.
Definitely. Now, a lot of the speaker's choices also reflect a focus on thematic investing.
Thematic investing, meaning what exactly?
It's about identifying and investing in emerging trends and technologies.
So like betting on the future.
Exactly. And the speaker mentions examples like electric vehicles, the metaverse, and rare earth material recycling.
Okay, so it's about looking beyond the current headlines and trying to anticipate where the world is headed.
Now, the speaker also touches on some more advanced concepts like short selling, which is basically betting that a stock's price will go down.
Oh, so it's like the opposite of buying a stock.
Right. And they also mention using inverse ETFs, which can be a way to potentially profit from or protect against market declines.
Okay, so those are definitely strategies for more experienced investors.
Yeah, for sure. Now, it's also worth noting that some of the stocks the speaker holds pay dividends.
Dividends, meaning those regular payments that some companies make to their shareholders.
Yeah. So in addition to potential price appreciation, you're also getting a little bit of income from the investment.
Okay, that's a nice bonus. Now, the speaker gives a great example of how news events can impact individual stocks.
Oh, yeah. What was that?
They talk about Snap's stock price dropping after a disappointing earnings report.
Right. And that shows how company-specific news can have a big and immediate impact on a stock's value.
So it's important to stay informed about the companies you invest in.
Absolutely. Now, I really appreciate the speaker's willingness to share their trading mistakes.
Oh, yeah. Like they're not afraid to admit when they mess up.
Exactly. They talk about a losing trade with BuzzFeed, and it's a good reminder that even experienced investors make errors.
It's all part of the learning process, right?
Definitely. And it also highlights the emotional side of trading, which can be tough to control sometimes.
Yeah, emotions can definitely get in the way of good decision making.
Now, something else the speaker mentions is having two separate investment accounts, one for long-term holdings and another for more active trading.
Oh, so that's a way to kind of compartmentalize your investments and your strategies.
Exactly. It can help you manage different levels of risk and stay organized.
Okay, that's a smart approach. Now, towards the end of the videos, the speaker gives a snapshot of the market at the time of recording.
Oh, yeah, I remember that.
And they note that some well-known stocks, like Walmart, were trading near their lowest prices of the past year.
So they saw that as a potential buying opportunity.
Yeah, because sometimes those dips can represent a good entry point for long-term investors.
And specifically with Walmart, the speaker highlights their investments in artificial intelligence and online sales as positive signs for their future.
So they're not just looking at the current price, they're also considering the company's long-term prospects.
Exactly. Now, we also hear about the speaker's strategy of making short-term trades based on market volatility.
So like trying to time those ups and downs to make a quick profit?
Yeah, they use companies like Meta and Walmart as examples.
Okay, so it's a more active approach, but it can be risky if you don't know what you're doing.
Definitely. All right, so let's wrap up this deep dive and think about what it all means for you, the learner.
We've covered a lot of ground, from understanding how to approach learning about investing to looking at specific opportunities and potential risks.
Remember the speaker's emphasis on how just being exposed to these ideas can be beneficial, even if you don't grasp everything immediately.
And their point about the potential that the current market conditions might offer, especially with the growth of things like AI.
And really importantly, the need to start forming your own informed opinions based on your own research and analysis.
Because ultimately, investing is a personal journey, and there's no one-size-fits-all approach.
Now, the speaker gave us a ton of stock examples, from established companies to more speculative ventures, which can be a great starting point for your own exploration.
Yeah, maybe pick a few that piqued your interest and do a little digging, see if you agree with the speaker's rationale.
And if you're ready to take some practical steps, maybe consider checking out a platform like Robinhood, which is known for being beginner-friendly.
Even just setting up an account and familiarizing yourself with the interface can be a good first step.
And you might also want to track the performance of some of the companies we discussed, just to see how they're doing in the real world.
It's like putting theory into practice.
Now, as the speaker highlighted, investing is a continuous learning process.
So don't feel pressured to understand everything perfectly right away.
Those aha moments will come with time and experience.
And remember the speaker's strong encouragement to think independently.
Don't just blindly follow the crowd. Do your own homework and form your own convictions.
Because that's how you develop your own investment style and make decisions that are right for you.
Here's a final thought to ponder as you continue on your investing journey. Reflect on the balance between the potential rewards of investing and the level of risk you're comfortable with.
What are your lottery ticket opportunities and what are your more stable long-term investments?
Finding that sweet spot that aligns with your goals and your risk tolerance is key to a successful and fulfilling investing experience.
And remember, the best investment you can make is always in yourself, so keep learning, keep exploring, and never stop growing.
That's the real key to success, both in investing and in life.
Well said. And on that note, we'll wrap up this deep dive. Thanks for joining us, and we'll catch you next time.
See you then.
Bye.